Hello everybody, this video will be talking about pretty much how I use key levels, order blocks, and fair value gaps to pretty much kind of determine which name is kind of showing relative strength, relative weakness, or strengths with the markets by holding our key levels slash order blocks and fair value gaps, right? So this video will have a lot of information, right? Actually a little bit too much information, so I might not make it as long, but this it'll have no editing, no cuts, just straight raw, right? I'm just gonna be straight talking the whole time, so a lot of information. So get your notepad out because I'm gonna be talking a lot and dropping a lot of sauce, right? So let's get into the video. So as usual, right? Um, right, we want to have levels on our chart, right? To basically begin with, we always want to have where we're opening up, right? We want to know if we're opening above our key levels, like our previously high, our pre-market high for that move to the upside, a break and retest of this hold to the upside, or for the bear scenario, right? For an A plus continuation setup, right? You want to see us breaking below this area, retesting it, and showing that move to the downside, right? So there's two kind of scenarios you want to see on these stocks, right? An instant retest or like a later break and retest of that level, right? And usually I trade instant retest, right? Because you'll pretty much you'll find out very quickly if you're wrong. If you're right, you get paid very nicely, right? So you can make your risk reward very nice on these trades, especially if you can understand when to enter properly, right? I'm not gonna kind of go over a strategy video, but I'm gonna pretty much talk about how I use kind of order blocks, fair value gaps, key levels, kind of gauge a market's gauge a name strength, right? And I'm not gonna talk about how I use QQ and SPY also relative to these names because then the video will be like 2 hours long. But this will be like a little snippet, right? So what's a good example, right? So this is the price action we had on March 13th, right? So if you guys want to open up the charts yourself, but what's happening, right? So let me pull up Nvidia, right, compare to QQ and SPY, right? So we kind of understand how to use these to our advantage, right? So where's Nvidia opening up, right? So as usual, your pre-market game plan, you should always be seeing where we're opening up on our names, right? If we're opening above our key levels, right? If the name has news, right? Because if we're opening above our key levels, like a pre-market high or a previously high level, that means that if we're on the higher time frame, we can then target higher time frame objectives, right? Let's for example, price technically closed above this pre-market high level, right? Now it's into a trade. Then we can go on the 1 hour time frame, right? We can go on the 1 hour time frame and where's the market open this day, right? If we technically close above this like area, right, then we could target a higher time frame objective. Like we can then target this yesterday's key pivot point, right? We target 186 key level, right? So we simply just want to see us break above and below our key levels, our previously high, previously low level, or pre-market high and pre-market low. They're usually together, they're usually very near each other, right? To kind of target those higher time frame objectives, right? And how do you kind of gauge if a name is showing relative strength and relative weakness, right? You want to see what QQ and SPY is doing, right? So if a name is at low of day, right? QQ and SPY is at low of day, and there's a name at high of day, right? Like let's say for example Palantir. I know that Palantir I think on Thursday was kind of near high of day while QQQ and SPY were near low of day. So you can kind of use that example, right? So Palantir, right? We're opening up above our previously high level, which is right here, and we're opening above our pre-market high level, which is also right here. I would have it marked out. Actually, I'll mark it out. But these two are key levels, right? So previously high, pre-market high level, right? So we expect strong buying and selling at these areas, right? These are very strong areas of liquidity. So we can kind of mark out this entire zone, and you will normally see very big body um closures above and below this level, right? Or very strong wicks, right? Because you either will see very strong buying and selling, or wicks showing that there's buying and selling. I look stupid doing that shit, but like you will see like wicks at these levels, or you'll see strong body closures closing above and below, showing strong sellers and strong buyers, right? This is not a price action video, right? Learn price action if you don't know what it is, right? Because literally the best topic ever. But right, we want to see what price is doing at these levels, at these pullbacks, right? This is my second take, so I kind of drew it out, but we simply just want to see this bullish market structure, right? Like guys, trading, you want to simplify it, right? You just want to see these higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Of course, it's not gonna look as clean, but you simply just want to see this previous resistance now turn to support when we retest it, right? To maintain that bullish market structure, right? If we can do this while we're outside of our previous day highs range and our pre-market highs range, while QQ spot near low day or in range, meaning that's showing relative strength, then this is a high probability name to trade, right? So now that's just step number one. Now you want to find an entry model, right? This is not an entry model video, but I'm gonna be pretty much talking about how I use kind of fair value gaps and order blocks to kind of judge that we're kind of maintain that strong downtrend on names, right? So let me show NVIDIA for an example, right? Actually, before I go into that, let's get the basics out the way real quick, right? So main key levels I use will be previously high level, pre-market high, pre-market low and previously low level, right? Once you get a little bit better at trading, you can have the opening range low and opening range high and our previously closed level. But for now, always have these levels marked down on your chart, right? If you don't have the levels marked down on your chart, I have my own indicator, but you also go on trading view and just get one. There's multiple free ones as well, right? But you always have to have these levels because if you don't have levels marked down, you're trading blindly. Like I don't know a single trader by the way, I'm sure it doesn't have levels marked out. I don't know a single one that is profitable and that does not trade without levels because that doesn't even make sense to be honest. Like it doesn't make sense, right? You have to have levels because that's kind of like an edge you can have, right, in the markets, especially as a retail trader. So yeah, let me show you guys in a video. Actually, Apple. Apple is a good example, right? So this is the market. This is what the market did on Friday, right? We can see Apple had a very strong downtrend. We're not opening below our previous day lows range, right? We're opening within pretty much the low of our previously lows range, but not below our previously low range, right? So it's not A plus yet, but right, we see we're kind of maintaining bearish market structure, right? We kind of see QQQ and SPY also maintaining bearish market structure, especially rejecting VWAP, making those lower highs, lower lows, lower highs, lower lows, right? And so you kind of also want to see a name that's also showing weakness with QQ and SPY to play that name, right? To kind of also show that relative weakness if QQ and SPY end up kind of chopping around. This name can also continue to make new lows, right? That's what kind of plays names with relative strength and relative weakness. Because if QQ and SPY ends up slowing down or ends up having a deeper pullback, you want to see your name with relative strength, relative weakness that you're playing, hold those key levels / confluences for that move to the upside, for that cleaner move, right? So, um, what is an oral block and what is a fair value gap, right? I'm not gonna explain too much, right? But if you kind of have to understand what the higher time frame is doing on these names, right? I trade the 1 minute time frame because I understand what the higher time frame is doing when we have these consolidation areas or these break and retests, right? I understand. Like, look at this example, right? Apple pretty much breaks our low day level plus our pre-market low, right? We're breaking our wait, what is this level? Right, yeah, pre-market low plus our previously low level, right? So wait, this is actually not like I guess the pre-market low is a kind of glitched over here, but we're breaking a pre-market low, right? Plus 5 range low. Okay, so now we can kind of look to see if we reject this fair value gap or reject this aura block, consolidate for that move to the downside, right? You can have, there's a lot of entry, there's a lot of steps you can take here, but I'm just gonna be talking about what you kind of want to see for that bearish market structure, right? So what is happening here, right? What is happening here? This is an aura block, guys. So you kind of okay, so in the 1 minute time frame, it doesn't look clean, right? We're technically holds aura block, right? But if you kind of look at a higher time frame, right, we're technically rejecting this fair value gap, maintain that bearish market structure, right? That lower high, lower low, lower high, lower low. Wait, lower low, lower high. My bad, fix it, mixed it. Lower low, lower high, lower low, lower high. We're still maintaining that bullish market structure, right? And as we came back down to these lows, we ended up coming back up here. And what did we end up retesting, right? We ended up retesting this order block, right? And of course, on the 1 minute time frame, it does not look as clean. But when you get more experience, you understand that kind of the time frames overlap with each other, right? And you have to understand that. So on the 1 minute time frame, it might not look as clean as an aura block, but on the 5 minute time frame, right, this consolidation looks really nice as a rejection of an aura block, right? So where's Apple, right? So look, so let's remove this for that, right? This aura block right here technically is getting respected still, right? This aura block, right? We end up coming back up here, rejecting this range, and up coming back down, right? This is not as good an example, but I will give you guys a better example right now. So it's like as you're using this 1 minute time frame, you kind of want to understand what the higher time frame is doing simultaneously. And it sounds kind of difficult, but once you trade for so long, it's very simple, right? What is a good this trash price action. Okay. This was a good example, okay? So this was on Thursday, right? Thursday, March 12th. This was this trade, right? I have a live trading session, but I pretty much talked about this trade. Didn't end up taking it, right? But I pretty much talked about it, right? And how it looks on a higher time frame. So on the 1 minute time frame, guys, right? Where this is our previous day high level. My bad. This is our pre-market high level right here on this blue line in our previously high level, right? So since the levels are so close by, right, I might as well just highlight this entire area and expect this area to show strong buying and selling, right? Very simple. And as you see, very strong selling and very strong buying as we're breaking and reclaiming this level, right? That's how levels work because of strong buying and selling because of key levels, right? And so what ends up happening, right? We end up failing this step. So I took this Palantir trade, ended up losing, and we ended up breaking back below our previously high level and our pre-market high level, right? So we ended up breaking back below, and I ended up not looking at his name, right? I ended up looking at QQ Spy, took an A and B trade, right? But what happened on Palantir, right? We ended up pretty much just reclaiming back above our previously high level in our pre-market high level, right? So we're still technically in our intraday range, right? So this is where you kind of have to have that kind of higher time frame understanding that if you end up taking this trade, right, we're not trading above or below our our we're not trading above or below, right? Our intraday range. We're trading within our intraday range, right? But we understand on a higher time frame, we're break and retesting this key level, right? Which is a pre-market high or a previously high level, right? So on the 1 minute chart, this looks kind of messy, right? A very messy kind of reclaim. But if you look on the 30-minute chart, right, this looks like a very clean hold of that key level, right? So if you go on the 30-minute chart and go to that day, right? Of that day, right? So look, we had that rejection in the market open, right? We ended up breaking above, and we end up kind of showing a nice hammer stick candle at that reclaim of that level, right? So 30 minute actually looks kind of messy as well, right? We did end up rejecting that area, but we end up kind of reclaiming on the higher time frame as well, right? So 1 minute we end up reclaiming it, and 30 minute we end up closing above it as well, right? So I know on the 30 minute and the 1 minute it looks good, right? And you kind of can see this area wicks, break, reject, break, right? So this area, this 153.39, this 153.20 level is a key area on Palantir, obviously, right? Because clearly strong wicks at this area, strong support, strong support. So this is a simple break and retest, simple market structure. You have to understand, right? I know this video I'm kind of going to different topics and just talking about everything, right? Because I'm not that good of a YouTuber, right? I'm more of like a trader than a YouTuber, to be honest, right? But you have to understand what the 1 minute is doing on the 1 minute time frame and what we're doing on the 5 minute and the higher time frame, right? That's why these reclaim setups work, right? Because on the 1 minute time frame, we're reclaiming that key level, that previously high plus pre-market high area, and also on the 5 minute range time 5 minute time frame, right? We could also be breaking retesting that level, right? So the 1 minute could look choppy while the 5 minute was clean, right? So that's why these these reclaim steps kind of work because the higher time frame is holding while the 1 minute is kind of reclaiming it, but looks a little bit choppy still, if that makes sense, you know? So if you guys have any questions, just go to my Discord and just ask me in the questions. I'll answer the questions. But uh, but yeah, if you don't know any of these, if you don't know any of these like terminologies I'm saying, like fair value gaps, aura blocks, price action, key levels, wicks, like all these like this. I'll make videos maybe in the future, but for now, just go on YouTube and search them and understand them yourself, right? These videos are not for beginners, right? Because trading is a skill, right? I'm teaching you guys a skill I learned, so you have to get to that level of understanding the skill, like um, how do I explain it? Trading is like, for example, trading is like a video game. I love comparing trading to a video game because it's very similar, right? Everyone starts out at the lowest rank, and you end up with more experience climbing higher and higher and higher, right? Some people with the right education and just also genetics can kind of learn quicker and be better and get the higher ranks quicker, right? And the people that are like less unfortunate, right, will kind of stay at the lower ranks. And some people also will never break out of those lower ranks as well, right? I know a couple of traders have been trading for so long and they're still unprofitable. And then when I talk to them, right, like they're okay. That's not a roasting video, but it's like not everyone can get trained because not everyone's smart. Like you have to be a decent level of smart. You have to be a genius smart. You have to be literally a little bit above average. Like I'm telling you, if you're a little bit above average, you'll make it in trading if you at least put the work in, right? But if you're below average, like you might be cooked, right? But yeah, so I think I talked about pretty much what I kind of want to see, right? I kind of go over it again. You kind of want to see us for the highest um 8++ step. You want to see us opening above our previously high range, closing above our pre-market highs range, especially in the first 5 minutes. You want to see a break and a retest of that area to hold it to show us that we're kind of using that level of support and can move higher on the higher time frames, right? And then when we have that confirmed, right, on the higher time frames or the lower time frame as well, right, then we can target that lower time frame, that a higher time frame liquidity, right, on the bearish side or the bullish side, right? And how do we do that? I'm not going to talk about in this video, but if that kind of makes sense, that's what you kind of want to see, right? As options traders, you want to play with the trend, right? The trend is literally that your friend, right? You always confluences to your advantage, right? VWAP, key levels, bearish price action, holding of aura blocks, holding of fair value gaps. Because when you trade these continuation setups, right, you can have your risk reward so tight that you can kind of that's how you make money in risk options trading. You don't make money in options trading doing 1-to-1. You'll go homeless doing 1-to-1. You make money in options trading doing that 1-to-3, 1-to-4, 1-to-5, that 1-to-10, right? That when that option starts spiking up, right? Like of course in this market, right, we're kind of not showing like not that good continuation, right? I really haven't had any big wins honestly this year. I had a really big win in November on AMD for 14,000, right? But this year I really haven't had a big win because like I haven't had a big trade yet, right? Whereas like last year, like the months, like bro, trades would go 100, 200, 300%. Like literally, what the hell has happened? But yeah, so As always, you always want to use key levels. You always want to see a reaction around those levels, and to use those levels, you want to see a break, a retest, a hold of that level, and then continuation to the upside. Simple as that. Downside move: a break below our previously low level, or pre-market low level, and then a break and retest, and then continuation to the downside. Right. There's two types of break and retest, I would say. Right. There's kind of this one where like there's a lot of displacement, which I don't like. I usually like the instant break and retest. I like the ones that are like this. The ones that are like this, we instantly show strong bars, and I want to bond that momentum right here. That's what I like to do, right? So in this area, you'll usually see a fair value gap form. I want to see a reaction on that fair value gap. You'll see a previous kind of order block of a candle wick, right? So this is a candle. You want to see a previous wick of this order block, kind of use as support as well. So we can have a risk to reward kind of underneath this wick slash fair value gap, and our TP can be at those key levels, right? So on a higher time frame, it can be up here, up here, up here. I know this is a bunch of drawings, but I think this video will help a lot. At least a little bit, right? Like I pretty much leaked all the sauce. I have most of the sauce, right? It's just now you have to go in depth and get that experience, I would say. Um, but yeah, I mean, 15-minute long video. Just literally, I wouldn't take this entire video, right? No editing. I'll learn how to edit in the future, but yeah, like the most important thing is for you guys to learn price action and market structure as a beginner, right? Because that's how it moves the market, right? Bullish and bearish market structure. Of course, it won't look as clean as this, but being able to identify it is how you kind of find A plus steps, right? Because in those higher probability market conditions, right, you can get the easiest trades in options, especially, right? Nvidia, this trade's a good example, right? Look at this trade. We're above our previous high level. Our previous high level is right here. So let's mark it out right here. Previous high level is right here. Our pre-market high is also right up here, which is kind of a weird wick, but I guess this is like some sort of news, I would say. But look at this, right? So we're above our previous high level, so Nvidia can be on watch. Remember our pre-market high level as well, right? Now we simply just want to see buyers continue this trend. As you see, this 90 EMA is trailing very well. So what type of entry models can we see here? Can we have here, right? I'm now kind of going off topic and leaking entry models, but actually, do I leak the entry models? Um, I actually won't. I actually won't. I'll be in another video. But you can kind of see like on the higher time frame, right? We're simply breaking this level, right? Breaking it, retesting, holding the higher time frame, and then showing that higher high, right? So we want to be on that move after confirming that we're showing relative strength first of all, or QQ SPY is showing strength and it's following it, and then we want to just simply play with the trend with that higher high, higher low. As simple as that. Same thing on the downside, right? Usually downside you have to be more aggressive because, right, as they say, stair step up and then elevate escalator down or elevator down, because price is usually more aggressive on the sell side because there's more panicking involved, right? Whereas buying is usually more structured and more like more elegant. You see your levels kind of hold very nicely, right? So yeah, I think that's pretty much the video. I think I pretty much talked about what I kind of want to see with in terms of key levels, right? Market structure, I talked about key levels, order blocks, fair value gaps. You want to see these areas hold for that move to the downside, right? On Nvidia, right, if we ended up coming back above this fair value gap, right, this price action technically would not be invalidated, right? Price action, if we close above this fair value gap, right? Price action, or I mean this order block right here, this order block right here. If we close above this order block, technically we would still be in a bearish downtrend. We would still be bearish. Market structure still would hold if we rejected this 5 range low or rejected up here near VWAP. But for the most momentum, for that momentum trade that we're looking for as options traders, right? We want to see us hold below this order block plus this fair value gap, right? If that makes sense. So you have to understand that, and once you understand that, then you have to like pick the best names, because you can still technically be right and still get stopped out, right? If we could have came back up here in Nvidia and then projecting this fair value gap plus 5 range low off wicking it, and I'm coming back down, and I would have gone stopped out on this potential trade if I took it, right? Let's say, for example, I took this trade, right, off this rejection of this order block, right, targeting a 1 to 2, my stop loss would be above this order block, right? But I could have ended up getting stopped out on this trade, right? But the candle could have ended up wicking off this 5 mid-range low, right, this area, and we could have ended up having that nice breaking reach to the downside. But I was wrong. So my thesis was right. Market structure still ended up holding, but I was still wrong, right? So that's why you always want to kind of put yourself in the highest probability situations, because you can still end up getting the thesis right, but the move wrong, because you have to get both right, right? So that's when you kind of understand that as an options trader, then that's when you kind of understand you have to be taking the high probability steps, the the steps are above or below our levels are showing bearish price action that are also showing weakness with QQ and SPY. They're showing relative strength, relative weakness compared to QQ and SPY, right? Because if you're just taking dick shit steps, right, like you will end up getting stopped out, and the move will then still work out and then play your direction, if that makes sense, right? Um, yeah, no, I'm sick right now, so a little bit stuffy nose. But yeah. I think I talked about everything. I think I talked too much, right? 20 minute long video. And look in the video here, example, right? I'm not looking to play NVIDIA until above our pre-market high, right? Because look, we're closing above our previously high level, right? Now I want to see us kind of hold this level and then kind of show us a break of a pre-market high and then retest of this order block pre-market high for that potential move to the upside on the video for that continuation move, right? But we never end up even closing above this level, right? So the video was just never even, I was never even interested in the video, right? We end up just never closing below, never showing strong price action, didn't even show a higher high, higher low. That's why this name, that's why trading is so beautiful once you understand how to kind of understand when a name looks good or not good, because you can have the levels marked out, the thesis marked out, and then if it doesn't play out, you just don't take a trade. And then you can have that high win rate because you only take trades on those high probability trades, right? I didn't end up taking a trade on Friday because there was no good setups. Literally, there was good setups after kind of the first hour of market open, but I ended up getting off the screens before that, right? So there was no good setups in the first hour of market open, right? So um, or actually first 35 minutes I ended up leaving, I think 9:05, I think I ended up stop trading, but yeah. So yeah, so once you kind of understand, right, these levels and the price action around them, if they're kind of making higher highs, higher lows, or chopping, then you can understand when to take a trade, when to just call it a day, because you understand that if you're taking trades in the share market condition, you're going to lose money, right? Because guys, you can still have the thesis right and it'll still go in your direction, but you can still get the trade wrong, right? That's why like you don't want to be trading in those shit market conditions, right? That's why you always see me kind of being patient and cautious, because I know that the trade can still end up moving to my direction, but I'll still be wrong. And that's the worst type of loss you can have, is that when you're forcing trades in low probability market conditions, right? You end up getting stopped out, but we end up still maintaining market structure off of a wick of a deeper level, right? And we end up coming back down lower, right? For the nicest move, you want the nicest market conditions, and the nice market conditions are usually above these levels, showing a higher high, higher low, or below those levels, showing a lower high, lower low, right? When you're trading in the range, it's a little bit trickier, but you can still trade in the range technically, right? But you always have to see what QQ and SPY are doing, right? If QQ and SPY are breaking our low of day with strong price action below key levels, then you can end up taking a trade in the range, but just know it's kind of lower probability because we're still in our range, taking in the higher time frame, right? So there's no clear direction. Whereas if we're above or below our previous high level, above or below, then we can go in the hourly time frame and target those key objectives below or above, right? Um, and yeah, I think that's pretty much the video. I think I dropped a lot of information, right? If you guys found value, don't forget to like and subscribe. And if you guys want part two, I might do part two as well. But don't forget to like, subscribe, join Discord down below, and yeah, peace.